Alphabet and Tesla report. Wednesday, and after Friday's brutal tech rout, Wall Street wants receipts on a $700 billion AI spend, plus 4 more stories moving the tape. Let's get into it. The year's most important tech earnings week starts now. Alphabet and Tesla both report Wednesday after the close. Alphabet at a consensus $3.04 on roughly $116.8 billion in revenue, with Intel and IBM later in the week. But this cycle isn't about Ipsos. It's the first hard test of whether this year's $700 billion hyperscaler AI buildout is actually producing revenue. After Friday's sell-off, the market's patience for spend without payoff is thin. CapEx commentary and forward guidance will move these stocks more than the printed number. The bear case: Google Cloud's roughly 63% growth rate is under attack from faster rivals, and a delayed Gemini 3.5 Pro raises questions about product momentum. The forward signal: if cloud growth holds near 63% and CapEx maps to visible monetization, expect a relief rally. Soft guidance, and Friday's AI CapEx fear thesis gets its confirmation. Futures firmed into Monday's open, even as the U.S. launched another round of weekend airstrikes on Iran. That bounce follows Friday's sharp reversal, when a mega-cap tech and semiconductor rout dragged the Nasdaq lower on fresh worry that AI infrastructure spending has run ahead of returns. NVIDIA fell nearly 11% in June, yet the PCLX Semiconductor Index is still up around 60% year-to-date, which frames the whole debate: healthy consolidation or the start of a repricing. Underneath, a rotation is running. Money is pairing semis into big tech, with Amazon, Alphabet, and Microsoft each firming about 3%, and Apple stamping a fresh all-time high. The bear case: renewed U.S.-Iran strikes keep an oil overhang on risk assets, and if returns disappoint, the sell-off resumes. The forward signal: today is a positioning day. Wednesday's Alphabet and Tesla prints are the tell that settles it. China just fired the loudest shot yet at the closed model frontier. Moonshot AI released KIMI K3, a 2.8 trillion parameter mixture of experts model, the largest open-weight system ever shipped, and it debuted #1 on LM Arena's front-end code arena at 1679 ELO, edging past Anthropic's CLAUDE FABLE 5 and topping 6 of 7 front-end domains. The API is live now at $3 in, $15 out per million tokens, with full open weights dated July 27th, a 1 million token context window, and native multimodal input. This sharpens open versus closed pricing pressure and signals China is routing around U.S. compute limits. The bear case: on broad evaluations, K3 lands around Opus 4.8 and GPT 5.5, still behind Fable 5 and GPT 5.6. So this is a single arena crown, not overall frontier leadership. The forward signal: watch enterprise self-host adoption after the July 27th weight drop. That's the real threat to Western margins. The revenue leaderboard just flipped. Anthropic's annualized run rate, reported around $47 billion, has moved ahead of OpenAI's stated $25 to $33 billion. The gap is structural. Anthropic's mix leans on enterprise contracts, Claude code, and high-volume recurring deals, while OpenAI rides a consumer subscription base. That divergence feeds the backdrop for Anthropic's reported October IPO under the ticker ANTH. But be precise here, this is context, not fresh news. The bear case: the figures trace to disclosures from earlier this year. Run rate is not profit, and KIMI K3's $3 pricing is exactly the kind of cheap open-weight competition that pressures the enterprise moat these numbers depend on. The forward signal: the IPO filing is the next real catalyst. Watch whether Anthropic discloses margins alongside that 47 billion headline, because run rate without gross margin detail is a story investors have learned to discount. Google's flagship is still missing. Gemini 3.5 Pro blew past its July 17th target and remains in limited enterprise preview after internal tests flagged shortfalls in coding and long-horizon reasoning. Prediction markets now cluster around July 31st or early August for delivery. This matters more this week than usual. It's a live overhang into Wednesday's Alphabet earnings, where the street will press management on model timing and cloud momentum in the same breath. The bear case. Every slip erodes the narrative while rivals ship. Moonshot's KIMI K3 just took a front-end coding crown. And OpenAI keeps releasing, so Google is rebuilding in public against a moving target. The forward signal. If Gemini 3.5 Pro ships by month-end with genuinely improved coding, the overhang lifts and Wednesday's tone brightens. Another slip, and cloud growth alone has to carry the Alphabet print. The through line is simple. After Friday's rout, this is the week the AI trade has to show receipts. In earnings guidance, in open weight pricing, and in products that actually ship. Wednesday's Alphabet and Tesla prints set the tone. Subscribe to the Daily Alpha, and we'll break it down the moment it lands.